Hello and welcome to this live market analysis video where we go through an overview of the key markets. This is Jody Samuel speaking from FX Traders Edge, your Elliott Wave roadmap educating traders in currencies, stocks, and commodities. Who are we? We are a premier global online trading school, home of the Wavy Tunnel Pro trading system, where you can take our accelerated training at any time. We offer individual and institutional clients proprietary tools, services, and education to trade forex, CFDs, and stocks online. And our goal is to give the trader the tools to navigate the global markets with confidence. FYI, if you like what you hear today, you may be interested in joining our Accelerated Wavy Tunnel Pro Trading Program, which starts November 15th. Just go to wavytunnelpro.com to see the details. Welcome to the Live Market Analysis webinar. Today we are going to cover the following. We're going to look at the key market drivers with a fundamentals overview, and then we will drill down on the various asset classes, the dollar index, the S&P, and other indices, bonds, gold, and oil. Last week, the markets priced in a Biden presidency and a split Congress. Coming into the election, interest rates started reflecting higher inflation, driven by the perception of increased government spending and a clean energy package. So interest rates moved up. A split Congress and a Republican-led Senate means a more balanced scenario, at least until the midterm elections in 2 years' time. Does that mean that a major government spending package and an increase in corporate and capital gains taxes becomes unlikely for now? Well, that depends on a continued Republican-led Senate. If not, higher inflation will rear its ugly head sooner rather than later, and 10-year rates will go up. Wait, I'm getting ahead of myself. That was a scenario leading into today when the positive vaccine news took the market by surprise, as investors are now looking ahead to a well-deserved improved global economy. So in currencies and equities, that means risk on, increase in risk appetite. And the markets that took the biggest hit, gold and U.S. bonds. So I ask again, is this the end of the bull market in U.S. bonds? Let's see. Big picture view on the dollar, stocks, oil, gold, and bonds. Intermarket analysis is key to understanding market correlations and what is driving markets. And at any point in time, there are different drivers. So the key driver, which took the market by surprise, was the positive vaccine news right after the U.S. election results. Let's go through the different asset classes now and start with the U.S. dollar, the dollar index. The dollar index has been trading down since the COVID outbreak in March. Today, the COVID-19 Pfizer vaccine news drove the dollar index higher in what could be a trend reversal, even though it is really too soon to tell. Let's take a look at the dollar index and some of the other currencies and do a mini analysis together. On the left, we have the daily US dollar currency index, and on the right, we have the hourly. The red dotted line is the risk, the stop loss on a long dollar index position. And one scenario is that the index reverses and continues on up to take out the previous highs. On the hourly chart on the right, we have a triangle formation, and that usually spells a push up before we have a three-wave retracement. Now, moving back to the left, I've drawn dotted lines across the previous highs. That is where we would expect the market to pause on its way up if this is indeed a reversal. So all I've drawn in was a five-wave move into above these highs and into the tunnel, which would mean a correction after the triangle break, because triangles are typically a continuation pattern, and this would mean this is a 5-wave move up, 1, 2, 3, 4, 5, and then we would have a correction correcting this entire move. And then if we see some reversal candlestick pattern, a 1, 2, 3 reversal, for example, and a trend line break, then we could see higher levels for the dollar index. On this chart, all I've done was I've taken the US dollar pairs. So let's just talk about that. The gold arrows represent a higher dollar move on that respective chart. For the euro, the pound, the Aussie, and the Kiwi, a move down in those currencies would mean a higher dollar against those pairs. And for the dollar yen and the dollar Canada, a higher dollar means a move up. The dollar yen was the biggest mover in the dollar pairs. You can see that in the upper right hand corner. These are the daily charts. You see a very long and strong blue candle in the dollar yen. This blue candle takes out, it engulfs 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It engulfs around 16 candles leading up to that one reversal candle just on this news. So that's the dollar yen. The dollar yen, when we talk about the dollar yen moving, when we see the dollar yen moving up, the yen weakening, that is usually the response to a risk-on environment, which is what we are in right now. A vaccine means a move into a risk-on environment. So that means that the yen weakens not only against the US dollar, but against the other currencies as well. So this is not a straight dollar move, as you can see from the other currencies. Did we have as big a move down in the euro or in the pound? Not at all. Did we have a huge move up in dollar Canada? Not at all. Did we have a huge move down in the Aussie or in the Kiwi? Not at all. If we had, then we would call this a straight dollar move. So I'm calling this a risk-on environment, and we can see that on the next slide where I've put all of the yen pairs. So we have the dollar yen in the upper left, then the euro yen, the pound yen, the Canada yen, the Aussie yen, and the New Zealand yen. Look at these strong blue candlesticks on all of these pairs. So the yen weakened against the dollar, the yen weakened against the euro, the yen weakened against the pound, the yen weakened against the Canadian dollar, the yen weakened against the Aussie dollar, and the yen weakened a lot more against the New Zealand dollar. This is a risk-on news day. If some more positive news comes out about a vaccine, when it will be ready, if other pharmaceuticals will also be releasing vaccines, this is just going to promote good news, and the market will look for a retracement in these risk-on currency pairs and then look to buy the retracement. Let's move into the U.S. stock market. Move to the U.S. stock market. The stock markets have been performing really well, with trillions of dollars being pumped into the system globally from monetary policy and soon fiscal policy. With today's vaccine news, the Dow jumped 834 points to be up 2.95%. The S&P closed up 1.17%. NASDAQ closed down 1.53%, and the Russell 2000 up 3.7%. Why is NASDAQ down and the Russell Dow and S&P up? Very simply because investors rotated out of NASDAQ, and this was the result of investors getting out of the, quote, stay-at-home stocks like Zoom, Peloton, Netflix, and others. Those stocks tumbled. It might be worthwhile to see if this rotation continues for a while, and if we continue to stay in this risk-on environment, then the market will look to rotate out of NASDAQ even further. Perhaps, even with COVID cases on the rise. And that's because the market is very forward thinking and prices in future outcomes very quickly these days. Now here you can see the Dow in the upper left, so we have a very strong move higher and the market closed 50% of the way up. The S&P started out moving up and it closed in the bottom third. This is where NASDAQ closed at the lower end of the day's range, at the day's lows, and the Russell closed above the 50% mark of the day's range. So let's see what happens for the rest of the week and into next week. We are going to have a lot of volatility, but the question is, will this trend continue rotating out of NASDAQ for a bit longer while moving into the other markets? Well, now let's talk about bonds and global interest rates. Today's vaccine news may be the tipping point to end the long bull run in U.S. Treasuries. U.S. Treasuries have been a safe haven for investors for a long time. But the U.S. seems pretty unsettled these days, and with the risk of increased fiscal spending, that spells out a higher inflationary environment, which means we may have seen the end of the bull market in bonds. Let's look at today's price action. The 10-year U.S. yields were up 13 basis points today. Japan 10-year up 2 basis points. German 10-year up 11 basis points. UK 10-year up 10 basis points. Australian 10-year up 15 basis points. Canadian 10-year up 13 basis points. So bond yields increased across the board. Every single country took this vaccine news very positively in light of increasing coronavirus cases globally. Not everywhere. Some countries are doing very well. Bottom line is that it looks like we may have seen the bottom for interest rates for a while. This is a chart of U.S. government bonds 10-year yield. So we have two channel lines. The gold channel line captures all of the price action, and we have not broken through it yet. And the blue channel takes the three lows, and then I ran a parallel line and it only captures this price over here, and so it shows a breakout. But we haven't really broken out yet. We need to close above these highs, and what I would like to see is a move up followed by a retracement, and then I would be very comfortable being long. Now let's move on to gold and oil. Gold is historically a hedge against inflation, but it's also a safe haven investment. And with the Pfizer announcement of a vaccine that's 90% effective, the market took profits in gold, seeing it as a safe haven investment. And a move to risky assets, so a move into the stock markets and a move into the risk on currency pairs, means a move out of gold temporarily. So that's gold. Oil rocketed higher. Oil is a commodity that benefited, as this could mark the return of international travel. So the travel industry did very well today. Airlines, hotels, and cruise lines benefited. All of these stocks popped. Let's look at the charts. So on the left, we have oil. We have the weekly on top and the daily on the bottom. And I've just drawn channel lines on the weekly, but we had a nice pop, you can see on the daily, a nice move up in oil. If we break above these channel highs, then oil should continue to move higher. Gold is also forming a continuation pattern. Gold did give back all of its gains from last week. It could be that gold just stays within this channel for a while and trades within these channel lines. So that is the market analysis. I haven't done one of these in a while, but I'm glad I did. And I just want to invite you to participate in the Wavy Tunnel Pro 5-day accelerated trading and mentorship program. with me starting on Sunday, November 15th. It's a 5-day program. This is our flagship trading program where you will learn my personal system to achieving consistent profits in any markets, and we'll talk fundamentals, we'll talk technicals, we'll have a great time together. Just check it out on wavytunnelpro.com. And if you'd like to email me for anything at all, please do, jody@fxtradersedge.com. Thank you, and see you next time.